Why growth is slow at your accounting firm, and how to turn it around. You're doing good work, your clients pay on time, you meet deadlines, and you're putting in the hours. So why does it feel like every other accounting firm around you is growing while yours stays the same? The problem likely isn't your accounting skills but a lack of focus on the business side. Maybe you're not actively asking for referrals, you're pricing based on what you think is fair instead of what the market will pay, or you're so busy with client work that you never make time to grow the business. Let's go through the most common causes of stagnant growth and what you can do to fix each one. 7 reasons your growth stalled. 1. You're relying too heavily on referrals. Word of mouth is nice, but you can't build a business around hoping your current clients will send people your way. Referrals come when they come, and you have no control over when that happens or how many you get. You need a way to get new clients that doesn't depend on other people. That means having a website that actually shows up when people search for accountants, creating content that helps potential clients, and maybe running some ads. The goal is to have people find you instead of waiting around for referrals that might never come. 2. Your processes are manual and inefficient. If you're still chasing clients for documents over email, doing everything in spreadsheets, and handling invoicing by hand, you're wasting tons of time. These manual processes eat up hours that you could spend on growing your firm. Get some accounting practice management tools that handle the repetitive work. Set up client portals where people can upload their own documents. Use software that automatically sends invoices and follows up on payments. Connect your different systems so information flows between them without you having to enter everything twice. With these systems in place, you'll be able to do things faster and take on more clients without burning out. 3. Your firm isn't offering advisory services. Most accounting firms are stuck doing the same low-margin work, tax returns, monthly bookkeeping, and basic compliance. When that's all you offer, clients see you as interchangeable and will jump ship for anyone who charges $50 less. Add advisory services to your mix. These could include cash flow analysis, financial planning, and helping clients understand which products or locations actually make money. These services solve real business problems and make it much harder for clients to replace your firm. 4. You haven't identified a niche. When you try to help everyone, you end up being forgettable to everyone. Generic marketing messages don't grab anyone's attention because they don't speak to specific problems that keep business owners up at night. Pick a type of business to focus on: restaurants, medical practices, contractors, whatever. Once you specialize, you can talk directly about their unique challenges, use language they understand, and become the obvious choice when someone in that industry needs an accountant. 5. Your team lacks clear goals and accountability. Does your team seem to drift from task to task without clear direction? It's likely because you haven't set specific targets for anyone to hit. Without measurable goals, people just work on whatever feels urgent and hope they're doing enough. Why not give everyone specific numbers to aim for? For example, you can set a target for completing 15 tax returns per week during busy season, or require that monthly bookkeeping gets finished within 5 business days of receiving client documents. When people have targets to hit, they can focus their energy on what moves the business forward. 6. You haven't systematized client onboarding and communication. If new clients have to chase you for next steps, send the same documents 3 times, or wait weeks to hear back about their account setup, you're starting the relationship on the wrong foot. A confusing onboarding process makes clients wonder if they made the right choice. Create a standard process that every new client goes through. This can include welcome email that tells them exactly what to expect and when, a client portal where they can upload files and see progress, clear deadline for when their first monthly reports will be ready. When onboarding runs smoothly, clients feel confident about working with you, and you spend less time managing each new relationship. 7. You're not investing in growth-focused tools and training. Most accounting firm owners treat growth like a hobby they'll get to someday. They put all their time and budget into client work and hope new business will just show up. However, growth requires consistent effort and investment in the right areas. Set aside time each week for business development. Block out Friday mornings for networking, following up with prospects, or creating content that shows your expertise. Invest in tools that are important for growth, such as cloud accounting practice management software to handle workflows better or a decent CRM system to track your leads and follow-ups. When you treat growth as seriously as you treat client work, you'll start seeing results. How to jumpstart your firm's growth starting now. If these problems sound familiar, you're not alone. Most accounting firms hit the same roadblocks, but the ones that keep growing are the ones that actually do something about it. Here's what you can tackle this week. Look at your current software and pick one manual process to automate. Choose a type of business to focus on and rewrite your website around it. Add one advisory service you can start offering to current clients next month. Set performance targets for your team and schedule weekly check-ins. Write down every step of your client onboarding and clean up the messy parts. Block out 2 hours every Friday for business development activities. You don't need to fix everything at once. Pick 1 or 2 items from this list and get them working well before moving to the next. Small changes add up to big results when you stick with them consistently. Change comes before growth. Most accounting firms stay small because they keep doing what got them started instead of what will help them grow. But what works with 5 clients may fall apart at 10. The firms that break through this barrier are the ones that recognize when their old methods stop working. They invest in systems, specialize in profitable niches, and treat growth as a priority instead of an afterthought. Your firm can make this transition, too. Pick one area where you're still doing things the hard way, fix it properly, and watch how much easier everything else becomes.